Good morning, traders. Richard here doing a quick Ichimoku cloud chart review as well as a pointed figure chart review of the S&P 500 index. Index consolidating or sold off a little bit now since index became quite extended from the top end of the cloud. We were looking at how far this rally came, and also we were anticipating the August and September seasonal weakness in the market. But at the moment, you can see the index is selling off heavily. The next level of support is the top end of the cloud here, and traders should watch out for potential rebound from that level. It's currently testing this front end cloud chart support level at 5433. You can see the low there at 5433, and then the top end of the cloud here. So we could touch this level, support it, and then I would be looking for potential swing trades back from this zone if support comes in at this level. Also at this level, that gap will be closed as well. So that's kind of it from an Ichimoku cloud chart perspective. Became extended, consolidation started, a bit of a correction here, anticipating the usual August and September seasonal weakness in the market. Came a little bit earlier this year, but this is kind of a healthy correction, similar to what we've had here, where this previous correction in April pulled back right down to the bottom end of the cloud. And if that's the case, then we're looking at this bottom end cloud support zone here. 5,300 can even be a support zone at that level. This previous correction was almost just around about 6%, 5.9, and we're currently about 5%, a little bit less than that, but the potential for a 5% correction back here to the top end of the cloud is something we can anticipate. And if the market's a bit weaker in terms of the earnings season and we go back down to the bottom end of the cloud, then that is a 7% correction, so keep that in mind. So there's the downside risk targets. Its first stop is the top end of the cloud for a potential rebound. The next stop is then the bottom end of the cloud for a potential rebound. But be aware that we are going into a very seasonal weak period on a seasonal basis in the market. If we now look at the S&P on a 25 by 3 point and figure chart, we can see the index took out a couple of upside targets, 515,275, 5325, 550, and 5625. We then got a reversal to the downside for a consolidation of this entire move. So we are now taking a little bit of a breather here on a pointed figure chart basis. There's downside risk up to 5,200 on this pointed figure chart, so be aware of that. But we could see some support coming in at this previous high at that zone there at 5350 in the current market correction and consolidation. So, but there's a significant downside risk to 5.2 of this current rally on the 25 by 3 high-low point and figure chart. We still got an upside target of in and around the 6,000 level between 559.25 and 6,075. So we picked a 6,000 level there as a nice round figure, an upside point and figure chart target for that move. Now, things to watch out for: any kind of reversal. A 75-point reversal to the upside will signal the end of the current downtrend on this particular pointed figure chart. So watch out for that. If we get that reversal, then we're going back up. And then we've got the first shorter term target to look for is 5725. And then this move is a much longer term target, 6550. So we have some really high targets there. And it will be interesting to see if we're going to get to those upside targets. But over the short to medium term, it's 5725, 5925, and 6,000 roughly for kind of Q4 of this year as a kind of a year-end rally upside point of figure chart target. Now let's take a look at the logarithmic scale. Yeah, we've got the 1% by 3 point and figure chart. We can see we took out a host of upside target: 5,000, 5,101, 5,3, and then 5,635. It was 3 upside targets there. Then got our reversal to the downside. Now we've got 2 upside targets: 5,806 and 5,692. These are the next upside targets if we get a reversal to the upside. The downside risk on the 1% by 3 point and figure chart is 5,152. It's about another 5% correction. And that brings us into this whole cluster of support here. So it will be interesting to see what the market's going to do when it gets to 5,300. Will we get a reversal there? or will support come back in at that point in time, or are we going to get a little bit of reversal here as we see a little bit of a 50% pullback of that move to the downside? So watch out for potential support around 5,400 and 5,350. To the downside, and then a reversal to the upside. And if we get our pointer figure chart reversal, meaning another X to the upside there, then we've got these two targets, 5692 and 5806, to look forward to. Now, this particular move here is quite a strong move. So that upside target is 8474 is a 56% rally, so we won't get there anytime soon. But that is a target based on this move, and I would think that it's not quite achievable at this point in time. Point of figure target's got no time frame, so that is pretty much a very long-term target on that particular move. And if we look at this move up here, that one is even higher there. That's 31%. Yeah, 7,1555. So depending if the economy is really going to drive earnings over the next 18 months, then we should see the 7,000 target. But over the shorter term now, we'd rather just looking for the 5,800 target on this particular 1% by 3 point and figure chart. So the catalyst to look for is any kind of reversal on the point and figure chart to the upside to signal the end of the current trend, and we expect a reversal in and around this cluster of support around the 5,300 point and figure chart support zone. Until next time, happy cloud chart and point and figure chart trading. Bye for now.